All right. Thanks, Christina. Good morning, everyone. I am Krista Gardner. I am located in our York office. I have spent my entire career working with government and nonprofit entities, specifically on the compliance side with audits, reviews, and comps. However, the past 6 or 7 years, I've also provided outsourced CFO and accounting services to government and nonprofit entities, and I'm focusing more of my time these days in that direction, leading that initiative for our firm. I also apologize. I'm getting over a cold, so hopefully I don't start coughing along the way, but bear with me. And I'll hand it over to Gary, and then he'll get us started.
Morning, everybody. My name is Gary Snyder. I've been with SEK since 1996. I have about 28 years experience. I manage about 25 plus audits throughout the year. I manage compilations, reviews, 990s for over 40 clients, and my primary focus is on nonprofit world throughout the year. Obviously, the single audit uniform guidance applies to the nonprofit as well as the governmental sector, so that's what we're going to be covering today. So I'm going to be covering the federal funding and uniform guidance updates that were implemented and issued in 2024. And then Chris is going to be covering the best practices under uniform guidance related to internal controls. So the uniform guidance was issued back in 2013, and it was a framework for the management of federal grants issued by the OMB. It does apply to all recipients of federal awards. So if you're getting any kind of federal award, you are subject to uniform guidance. And the intention when the uniform guidance was issued at that time was to update the guidance every 5 years. It was last updated in 2020 with some minor revisions. And then in 2024, a more significant update was released. And that's what we're going to be covering today. That has some significant changes within it that will affect everybody that gets federal funding. So some of the objectives of the changes, the changes really were intended to incorporate some of the statutory requirements, obviously with administrations changing and their priorities, to incorporate some of the statutory requirements in line with those administrative priorities and line them up better than they had been in the past. Another objective was to reduce agency and recipient burden for both recipients and the agencies to try to limit some of the requirements and try to make it a little more streamlined and easier for both the recipients and the agencies overseeing the funds. They did clarify some of the sections of the prior guidance were interpreted in different ways. Some of the sections, one agency would interpret it one way, another agency would interpret it another way. Some of the recipients interpreted it a completely different way. So they tried to streamline some of the wording and some of the interpretations of those into one much easier to interpret manner so that everybody's on the same page when they're trying to interpret the guidance that is out there. And they did rewrite applicable sections in plain language to improve the flow, address inconsistencies in the use of terms. They did change some of the terminology, which we'll go over here in a minute. But the intention, again, was just to write this in plain English so that everybody can understand it, everybody's on the same page, and it makes it easier for everybody to follow the rules and the guidances in there. So as I mentioned, one of the key provisions was some of the terminology changes. So now throughout the guidance, the grants and agreements is now considered, it's called federal financial assistance. Non-federal entity is now recipient or subrecipient in subparts A through E. However, subpart F retained the non-federal entity to align with the Single Audit Act. So you'll see the non-federal entity is still there, but it's only going to be in a subpart F section related to the single audit because it does line up with the single audit wording in that. You or your is now a recipient. Small purchases is now simplified acquisitions. And micro purchases and simplified acquisitions are types of informal procurement methods for small purchases. And you may say, what difference does it make? They're just wording. But again, the intention here was to streamline some of the wording because they had different, like they might have grant in one section, federal financial assistance in another. So they were trying to streamline and make them consistent so that they're using, for example, federal financial assistance throughout all the sections now so that everybody's reading the same information no matter what section you're in and can interpret those wording, the words in the same manner. Some of the other key provisions, they clarified some portions of the guidance, corrected some typographic errors, and again, cleaned up some of the other wording, again, trying to make them consistent between sections so that everybody's interpreting them in the same manner. And again, they emphasize the use of plain language to make it more accessible to more organizations. One of the complaints that they were receiving was, that was some of the wording and some of the um, descriptions were not as easily understandable, particularly for all organizations. Like some of the large organizations, more complex organizations might understand it, but they wanted to make it more understandable for any organization, from the largest organization down to the smallest organization that may be falling under uniform guidance, so they can interpret it in the same manner and understand what the guidance is requiring. A couple other key provisions previously required to report all violations of federal crimes involving fraud, bribery, or gratuity violations. But now that was changed to you must promptly disclose when there is credible evidence. You'll see credible evidence is highlighted there of a violation of federal criminal law involving fraud, conflict of interest, bribery, or gratuity violations under the False Claims Act. So again, that credible evidence is new. So you have to have credible evidence. Once you have that, then you are required to report those violations. Also add a requirement to take reasonable cybersecurity and other measures to safeguard information, including PII and any sensitive information. Obviously, with all the information in the news now about cybersecurity breaches, it's become a hot topic. It is a major issue, particularly for governments. It's very broad in what the requirement is. It just is very basic of you need to provide some kind of reasonable cybersecurity measures to safeguard the information. So it kind of lets it up to your interpretation, but under the requirement, you need to have something in place to address how you're protecting that sensitive information. A few other key provisions that did permit Indian tribes to be treated as the same as states and follow their own procurement policies and procedures, which was not in place in the past. Recipients or subrecipients may exercise judgment in determining the number of bids obtained as adequate. So they loosened that up a little bit. So now that the recipient can basically determine, okay, how many bids do we need to have to feel that how many is adequate that we can feel that we have a good population to say, okay, we need 5 bids. That's enough to meet our needs. There is no set requirement now. It's basically up to the recipient to set that. So that did loosen that up and made it a little bit easier for the recipients to determine the number of bids is adequate for what their needs are. Then pass-through entities must accept all federally negotiated indirect cost rates for the subrecipients. I think it goes without saying, pass-through entities must accept those rates and goes down to their subrecipients then. There were certain cost principles that required prior written approval requirements under the cost principles. That has now been removed, and there's a list here of the different areas within the cost principles that has been removed for. So again, that's simplifying that process for the recipients. You do not need to have that prior written approval requirement for these particular areas now for their cost principles. A few other key provisions here. It allows a cognizant agency for audit or oversight agency to authorize an extension if the 9-month filing requirement would place an undue burden on the recipient. Now, previously, only the OMB could grant that extension, but now the oversight agency or the cognizant agency can provide that extension if the 9-month filing requirement would place an undue burden on the recipient. So that is a significant change. The CFA may now be prepared in accordance with GAAP or OCBOA. Before it was just GAAP. Now you can use OCBOA in your preparation of CFA. And when question costs are not determinable or unknown, you must report why the dollar amount was undeterminable or could not be reported. So when you get to the question costs on their CFA reporting, you may put not determinable or unknown, but you can't just let it at that. You have to put some kind of footnote to describe why is it not determinable, what is the factor that's unknown, describe some of the information around that as to why you were not able to come up with that information to establish what the question costs are. Also revise the definition of performance of period of performance to mean the time between the start and the end of the federal award, which may include one or more budget periods. So there's some confusion on this as to, okay, does it cover the budget periods? Does it cover the reporting periods? So they clarify the period of performance is truly when the start and the end of the federal award is, regardless of how many budget periods it may cover, regardless of how many fiscal years that may cover. That's what, the start and end of the federal award is clarified now. That is what the period of performance is for any grant. The period of performance does not commit the federal agency to fund beyond the current approved budget period. So I guess there was some confusion over that at some points. There were some assumptions that the federal government would fund beyond that, but there is no commitment. They clarified that there is no commitment for the agency to fund beyond what is the approved budget period now. And federal awarding reports may not be required more frequently than quarterly. Some of the agencies apparently were doing some monthly reporting requiring that. So they've clarified that and said no, federal awarding reporting can now not be required more frequently than quarterly. So if they were doing monthly in the past, they cannot do that anymore. It has most frequently you can do a reporting as quarterly. So this slide is probably the biggest one that's getting the most attention because of the single audit threshold. The single audit threshold did increase from $750,000 to $1 million. So if you have federal expenditures over $1 million, you are still going to be subject to single audit requirement. But if you're under the $1 million, so if you were always teetering around that 750,000, you were just over that, you were subject to single audit. If you can remain below that $1 million in federal expenditures spent, then you're exempt from the single audit threshold. So it only applies to any federal expenditures over the $1 million threshold are now going to be subject to the single audits. Another big change was the de minimis rate for indirect costs was always at 10%. They have now changed that for you see to up to 15%, and up to is underlined. So that can be any number. It can be from 11, 12, 13.5, 14%, anything up to 15%. So that's really going to be interesting to see how that plays out and see what organizations use with that and what agencies provide feedback on what that de minimis rate can be used and is used within the reporting for that. The limit on fixed amount subawards has been increased from 250,000 to 500,000. The increase the capitalization threshold for equipment and supplies from 5,000 to 10,000, however, is still the lower of your capitalization policy or 10,000. So if your capitalization policy is still 5,000, that is still your threshold. So this is an opportunity to look at your capitalization policy and consider whether you want to raise that up to that $10,000 threshold. But you're only allowed to use the lower of your capitalization policy or the 10,000. But they did raise that to the 10,000 you can use now. Increase the definitional threshold for modified total direct cost from 25,000 to up to 50,000 for each subaward. And then in conjunction with the single audit threshold, they increase the type A threshold to $1 million for awards expended between 1 million and 34 million. So this is probably the biggest slide that is getting the most attention because of the single audit threshold. There was a lot of thought that this is going to eliminate a lot of entities from having to have single audits. I was looking at some data, and really there's going to be some that's going to drop off, but it is not. There's a significant amount that are over the $1 million threshold, so it's not going to really have a significant impact other than for obviously smaller organizations. So effective dates. The changes were effective October 1st, 2024. The changes to the single audit threshold in the Type A program are reflective for years ending on or after September 30th, 2025. So if you were a June 30, 2025, these new changes are not going to apply to your audit in June 30, 2025. September 30, 2025, December 31st, 2025, you will be subject to the audit threshold and Type A program changes that we just talked about. Related to that, then, the new federal awards issued on or after October 1st, 2024 are assumed to follow the updated guidance. So if you have a new award that was issued in November 2024, that will follow the updated guidance and the implementation of that. Federal awards issued prior to October 2024 then should use the previous uniform guidance. So you may have several that are under your old guidance, but if you have any new ones since October 2024, you will have some under the new guidance. So you could have a various grants under either previous or updated guidance depending on when they were issued and awarded. Subawards should follow the same version as the primary award. An exception was granted allowing all recipients and subrecipients to use the revised $10,000 equipment threshold we talked about, even for awards under prior guidance, if permitted by the federal agency that made the award. So you can use that revised $10,000 equipment threshold even for awards under the prior guidance, but you're going to need to get federal agency approval of that to make that happen. Next. So what does this mean for recipients of the federal awards? So you need to understand how the changes will impact your organization. Obviously, there's a lot of different changes, a lot of different wording. Some things will impact organizations much more than others, but you need to look at all the different pieces of the changes and how is that going to impact your organization. Many sections require a recipient to have written or documented policies and procedures. That's nothing new. That's always been a requirement. However, you should review your internal controls and your related policies to ensure they comply with any of the revisions in the updated guidance. Understand the effective dates and what this will mean for your organization. Obviously, depending on when you're getting these awards, that's going to depend on what guidance you are following. If you're using the previous guidance or the updated guidance, depending on when those awards were granted to you. Educating your staff on the revisions and impacts of the organization, depending on how many people you have involved in this process, they need to understand the revisions also and make sure they understand what the changes are and how it's going to affect the organization so that they are effectively implementing these also. And then indicate the applicability of the revisions by award on the CIFA. So obviously, depending on when the awards were issued, that's going to impact your CIFA, how they're reported on the CIFA. So it's a matter of sitting down and looking through those and saying, okay, well, how is this award going to be impacted on the CIFA? How's it going to have to be reported? Are there any changes we're going to have to make when we're preparing the CIFA related to these revisions? So, okay. And now we'll turn it over to Krista for her presentation.
Great, thanks, Gary. So I'm going to just kind of piggyback on some of the things that Gary just talked about on the last slide to just highlight just some reminders, some things to be remembering when you're dealing with federal grants. And maybe for those of you who don't deal with this a lot or would be dealing with it for the first time, some things to be thinking about. So one of the things that we talk about quite a bit is the difference between a financial statement audit or your regular audit and a single audit. One of the biggest differences here is on a financial statement audit, you may or may not have an auditor testing controls. Testing of the controls are not required. Depending on your organization, your staffing, the controls you have, the audit approach that your auditor takes, they might test controls and they might not. We have a little bit of ability to kind of design our audit in different ways there. So that's really where you're probably used to a lot of questions about the processes and procedures and walking through those and maybe talking about controls, but not necessarily having to test those controls. When you have a single audit, it is required that those controls get tested. So not only are we testing the transactions and the reporting related to those federal awards, we also have to test the controls related to each area that we have to test. So that is one big item that is just a reminder in what that testing looks like, the documentation, the types of questions that might be asked when you go through that audit process. On the next slide, then, we pull actual verbiage straight from uniform guidance. And Gary hit this on the head when he first started the presentation, is even if you don't have a single audit, the minute you get $1 of federal awards, all of uniform guidance is applicable to you. It doesn't matter if you're getting a single audit, it is applicable to you if you are spending federal dollars, receiving and spending federal dollars. And so the control piece of this is where a lot of times we see there's a lot of unknowns related to it. People aren't thinking about it or kind of planning for it. And it all comes back to making sure that you have controls. But then, as Gary said, it needs to be documented. So all of your policies, procedures need to be documented related to how you receive and spend those federal dollars. And the part here in red really highlights that it is required of any recipients and subrecipients of federal dollars to establish, document, and maintain effective internal control over the federal award that provides reasonable assurance that the recipient or subrecipient is managing the federal award in compliance with federal statutes, regulations, and the terms and conditions of the federal award. So obviously there's a lot more to this, but that's kind of the highlighted top level that really talks about, again, the minute you receive and spend federal dollars, you are required to follow uniform guidance. And that means making sure that in all areas you have those related controls. So then if we can go to the next slide, what are the things that we should be thinking about? And make sure you get that pop up out of the way. What are the things that you should be thinking about when it comes to controls? A lot of times we think of a control as making sure someone's approving something, which honestly is the thing that comes up the most. It makes the most sense. But there are 5 areas where we think about when it comes to different types of controls, what controls can look like, and how the organization itself thinks about plans and has the actual controls working throughout the organization. So those 5 areas are things that you also should be thinking about when you're considering what controls you should have in place. What are the areas of higher risk? This is where you as the organization get to do what we do a lot, and it's put on our auditor hat and say, what could go wrong? I encourage every one of you, as you're responsible for administering these types of funds, to be putting on that auditor hat and saying what could go wrong. And then that's where you can kind of identify where are the areas where we feel like we're missing controls. And obviously, feel free to reach out to your auditor or other advisors that you might work with if you want some, to kind of talk through some of this or want some recommendations on where you can maybe implement or beef up some of your controls. But the areas to be thinking about is the first one is our control environment. So that's really looking at the umbrella of the organization when it comes to controls. What is management's attitude? What is those charged with governance, your board's attitude about internal controls? Are they talked about? Are they taken seriously? Or do you have someone who's just kind of saying like, oh, only do that if you have to? We've run across that many times. That's not the right attitude to have when it comes to controls. The risk assessment piece then is really digging into and saying, where should we have control? So is management determining that there's a control activity or a control necessary to ensure compliance? And again, all of this and this discussion is focused around compliance with a federal grant, but it applies to your organization in total. And a lot of times the controls that we are utilizing to test in that single audit are the same controls that you use day to day in your organization. But this kind of gives you a reason to make sure that you've got all areas covered. Number 3 then is those control activities or those key controls. So how are we certain that we're in compliance? Is there someone that's reviewing and approving a report that's being submitted? Are expenses being reviewed and approved? Are there 2 signers on checks? Who's reconciling bank accounts? Is someone reviewing it? It's the actual control here of what's put in place. And just a reminder, we're not going this far into detail in this presentation on internal controls, but there are 2 types of internal controls. Preventative control, so it's a control that should prevent something from happening, or a detective control, a control that will detect something that has occurred. More to come on internal controls after this presentation. Number 4 then is information and communication. How are we talking about controls? Are we notifying people? The biggest thing here that we find is when an employee leaves or a position changes or someone new is a part of a grant process because maybe it now involves your recreation department. And so making sure that everyone who's involved in the process has an understanding of the expectations and what those processes are related to your controls. And the last piece is monitoring. How are you making sure that the process put in place, the controls are supposed to be happening, are happening? Are they being performed correctly? Are they consistent? And then also making sure that as time goes on and positions change and your activity changes, do any of those controls need to be altered in any way? Do you need to add controls, et cetera? On the next slide, then we'll talk about really the next 2 slides, some best practices. So first off is the grant requirements. So every award that you get usually has a contract, but there's also the whole compliance supplement through uniform guidance, which you look up that grant by the assistance listing number, and that's going to tell you all of the compliance requirements for that grant. And again, there are internal controls that need to be related to each one of those compliance requirements. So really making sure that everyone who's going to be involved in receiving the money, spending the money, reporting them on the money, et cetera, understands what's required of that grant, what reporting there is, the approved budget, if that's how you're supposed to be spending those funds, making sure that you're in line with that approved budget. And then again, as Gary had talked about, and I've highlighted, making sure that all of this is documented, because you want those that are a part of the process to be able to have something to go back to refer. But then also as you have new people come in, or we've all dealt with this where you have a changeover in management or a changeover in employee that maybe happened a little quicker than we would hope. We want somewhere that people can go back to and make sure that those policies and procedures are documented. And it is a specific requirement of uniform guidance that they are actually documented, not just in someone's head. Assessing those periodically for any appropriate changes and updates. And then depending on your grant, there may need to be some variation. Most of the time, your policies and procedures are going to be pretty consistent throughout your organization, and even, consistent through different funding sources. But just make sure if there's something in a grant document, a grant contract, etc., that requires something extra, make sure that that is happening and is documented. And then on my last slide, a couple of other reminders as far as best practices when it comes to specifically uniform guidance, but honestly, internal controls overall. Segregation of duties. We want to make sure that as many people as appropriate are involved in the process. You don't want one person at your organization having control over all aspects of the grant, whether it's the money coming in, the money being spent, the reporting. There really should be a segregation of duties, having multiple people involved. And depending on your organization, because this comes up a lot, we're small, we don't have many people, this could involve your board. There could be members of your board that are a part of these processes, and that's okay. And that's often what needs to be done when you're working for a small organization. So making sure you've got as many people involved in the process as possible, not saying that everyone in your organization should be, but as appropriate to make sure you've got that segregation of duties. Supporting documentation, making sure that you've got supporting documentation for everything. In general, but particularly when it comes to a federal award, because again, everything is going to be potentially tested. And that even comes down to making sure anything that you're claiming as those funds are being spent, making sure that there's supporting documentation of what it was spent on and the control or controls related to spending those funds, that there's documentation that those controls happened and were effective. And this often leads into using purchase orders or a multi-person approval process. Again, usually your normal processes and procedures, but making sure that if they need to be beefed up at all for those federal funds, that is happening. Approval process is one area where is often what we're testing. Timesheets. So if there are federal dollars that are being spent based on people's time, making sure that there's documentation of if they spend their time on different areas or different things or different funding sources, that there is documentation of how they spent that time. So you can then relate that to the pieces that you're claiming against those grants. And then again, the related approval process. And those approvals should be done by someone who has knowledge of what that person's doing or working on, whether it's a supervisor, et cetera. Journal entries. Often, many of you will have some journal entries where maybe that's how you're posting transactions or things need to be moved around throughout the year. If you're using journal entries to essentially charge against your grants, making sure that you've got that supporting documentation for why you did that journal entry, because a journal entry could be pulled as a transaction, and we want to make sure that there is the supporting documentation for what that journal entry was and that it was approved, et cetera. And then the last piece is oftentimes with your federal grants and even other grants, but federal grants in this case, you'll have reporting requirements. So not only making sure that you have an understanding of, do you have quarterly reports that you need to submit? Do you have a completion report that needs to be submitted at the end of the grant? Making sure that one, you know what those requirements are, but then two, you have someone who is knowledgeable of the grant activity that is submitting those reports, and then always having someone that's doing a review. Again, another knowledgeable person that's involved with that grant process to be able to review and approve those reports before they are submitted, because that would be the related control for the reporting compliance requirement that is often being tested for your federal grants. So just a couple of the big items that we talk about a lot, but just some best practices, reminders to be thinking about as you're dealing with your federal grants, as you get new grants that are coming in, and obviously implementing these changes if there's anything that you need to update on your documentation or your policies and procedures. I think that is it for our presentation. Christina, any questions?
Nope, no questions. Oh, wait, one just came in. Does a significant deficiency require disclosure in ACFR, or can it be included in the governance letter only?
So if you have a significant deficiency in internal controls, that is required to be communicated to your board. If you have a single audit, significant deficiencies and material weaknesses are included in your schedule of question, costs, and findings. So that would be included. If your audit is a financial audit, without a single audit, but is yellow book. And so you have an additional yellow book report. Some of those findings also could need to be reported in that yellow book report. But if you have a financial statement audit with no yellow book and no single audit, your significant deficiencies and material weaknesses would not be in your audit package, but would be in your communications to your board.